Dingoos, what is up? I hope you're having a fantastic day. Very exciting video in store for you. We're going to be going in depth on Mirror Protocol, a synthetic stock protocol, and tokenized stocks are obviously and clearly the future. I mean, it's very black and white. They can be integrated to DeFi protocols. You can trade them 24/7. You don't have to put up with like Robinhood terms of service and their baloney that's been happening lately with GameStop, etc., etc. So it's clearly the future, and Mirror Protocol is one of the leading protocols in that area. So it's definitely worth looking into, and that's exactly what we're going to be doing today. So make sure you stay tuned. I have a price prediction at the end, so make sure you stay tuned for that, and I guarantee it's not what you expect. Anyways, let's go ahead and jump into some numbers. Sitting at 530, $215 million market cap, 40 million circulating, and 370 million total, right? So a lot of inflation. Inflation is the name of the game over the next couple of years for this token, and that will suppress the price of per token, right? But a key thing to note, if you simply participate in their pools, your token balance should go up with inflation, right? So you should not really lose out on gains as long as the price at least stays the same price, right? As long as the market cap grows along with circulating supply. But anyways, the price is looking pretty good. It's pretty stable around $5, right? Saw a little positive price action today. Anyways, let's quickly talk about their vesting schedule and their inflation. So year 1, 233% inflation, year 2, 40%, year 3, 25%, and year 4, 15%. So keep that in mind. Over the next several years, there will be heavy inflation. Even 40% inflation is quite significant. So just keep this in mind. If you hold this token, it's pretty paramount that you participate in their pools, just so you get tokens along with the increased inflation, right? So just participate in the pools is really that simple if you decide to hold this long term. So let's go ahead into their Discord. Mr. Octo Image summarized this protocol very well. I'm kind of going to be doing the bottom line up front, and then we'll get into their UI and talk about their UI quickly. But anyways, let's just go ahead and read this and kind of get the summary of Mirror. The basics of Mirror is pretty simple. Users lock stablecoins UST to mint stocks. So lock up 500 UST, you can mint Apple. Then at any time you can return your Apple to get UST back. This gives you the mirrored stocks their backing, guaranteeing their value. All mirrored assets are over collateralized, meaning they hold more stablecoins than the asset is worth. As a user, we can use the swap interface to trade UST for mirrored assets, and it works similar to a traditional stock portfolio. In addition to just holding the mirrored assets, you can choose to add it to a liquidity pool. As liquidity providers, the Mirror system will reward you with Mirror tokens for your contribution to the ecosystem. All new mirrored assets are voted on by Mirror holders, so the more you use the platform, the more say you get in the future. For new users, your best option is to ignore minting. This is for more advanced features. So if you want to buy Mirror tokens or mirrored stocks, you can use Uniswap or etc. I think they're even on PancakeSwap. They're on Binance Chain, and they're on Binance, Luna. What is it? No, Terra, which is Luna, Binance Chain, and Ethereum. So they're on 3 chains, guys. So that's pretty impressive right off the bat. Anyways, let's move forward into their interface. I believe this is their Ethereum interface. Yeah, their Ethereum. So you can go ahead and buy Mirror. You can buy Twitter, USO, a bunch of different stocks, right? Mirrored stocks, good stuff, and then put it in the liquidity pool and earn Mirror tokens. So that's pretty cool. That is pretty cool, and there's going to be, I'm sure Mirror or somebody like Synthetics. Mirror and Synthetics are kind of in the same category in this aspect, but I think there's room for more people, right? Because it's so new, and I'm sure there's going to be multiple niches to go about this in the future to become a financial primitive for synthetic stocks within the DeFi ecosystem, right? And Web3 infrastructure. So Mirror could definitely be one of those financial primitives for synthetic stocks. So only time will tell, though. So keep that in mind. Now let's go into their minting. So this is their Luna Terra protocol. You can trade, mint, pool, stake. I mean, you can pool your tokens, stake your tokens, boom shakalaka. It's pretty straightforward, guys. I mean, you can buy mirrored assets and you can add them to a pool. It's really that simple, guys. I mean, it's pretty straightforward. And they're already on Binance Chain, so you can purchase mirrored tokens on Binance Chain. They just did that quick copy paste, you know what I'm saying? You can get a Terra Chrome extension wallet if you would like one. Also, my business partner wrote up a nice article on Mirror with his own opinion. Link is in my description if you want to go check it out, get another opinion on Mirror, because it's always important to get more than one opinion. And he goes, Mirror protocol mechanics, why do we need synthetic assets, developers, communities, competitors, roadmap, and conclusion, risk, price prediction, and conclusion. There you go, guys. Get more than one opinion on anything you do in crypto, because nobody is 100% right, let alone probably 60% right. So it's always nice to get more than one opinion, aggregate those opinions, and then come up with your own insightful thoughts and act on those insightful thoughts with conviction. And that's how you become somewhat, hopefully, wealthy. Who knows? But anyways, let's move on to some of the drama regarding Robinhood. So this was back in February 24th. I'm sure you guys already know this. This probably should be a little refresher for you guys. Earlier today, the New York Stock Exchange temporarily halted trading for GameStop as a result of the SEC's limit up, limit down rule impacting all brokerage. To be clear, Robinhood did not decide to pause trading. Stay up to date with the blah, 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 blah. So basically, they said, hey, you can't trade this stock anymore. And obviously people bought it, and now they can't sell it, and the price dumps, right? And they did this earlier that month as well in the big pump of, but big short squeeze, right? And that's huge. So, and also Mirror Protocol tweets this, here we go again, where does it stop? Take action and join us. SEC suspends trading in multiple issuers based on social media and trading activity. I mean, if Mirror can advertise to retail and Wall Street bets crowd, I mean, it's game over, especially if one of these goes off again, like say GameStop goes off again, or a different asset goes off and there's no place to buy it, and they're going to go to Mirror or maybe Synthetics if they have the certain asset, and just buy it there, right, and participate in price action. I mean, it's pretty ridiculous that the brokerages and the SEC definitely suppresses retail markets when they do something together, right? You're not allowed to collab. The government's only job is to divide us, to make us weaker. So that's exactly what they do here. They even try to divide us against assets in the stock market. It's disgusting, and it's very sad to see, and that's why I'm huge on decentralized finance. Decentralized, and that's a core thing. It has to be decentralized, which Binance Chain is far from. So really, Binance Chain could say, hey, we're going to suspend all trading on this asset. But anyways, I mean, it is what it is, guys. And well, actually, Mark Cuban brought up in the Mirror Protocol in this tweet saying, the problem, brokers trade at the speed of light, but settle trades over 2+ days. This can happen again. Coordinated traders can hunt better capitalized platforms and make GME style buy solutions blockchain. So there you go, guys. I think obviously you guys know Mark Cuban has been big on decentralized finance for a while, and he knows the space very well. And I mean, it is pretty obvious. It is pretty obvious that tokenized stocks are the future, because you can trade them 24/7 on an automated market maker, as well as you can probably use it and eventually use it as a collateral piece in any portfolio to take out a loan. I mean, DeFi is going to be the future, and tokenized stocks are definitely going to be a huge part of that future, guys. It's very obvious, and it's only a couple years away until it's very heavily integrated into DeFi and decentralized finance applications across the board. So we will see what happens, but I think Mark Cuban is totally right. Also, Mirror Wallet. So they already have a wallet, mobile wallet for synthetic assets, and I think marketing to the retail market is going to be huge, especially especially if they do it right and make it easy for people to do and gamify it and make it better than Robinhood, etc., etc. So I would definitely keep an eye out for Mirror Wallet. I mean, marketing to retail is huge, and if people can do it successfully, like Rari Capital is trying to do it, and if like somebody like Yearn, SnowSwap is trying to do it, but somebody's going to do it correctly and really hit it off. And Mirror Wallet could definitely do that if they do this correctly. We will see though. Anyways, my quick summary is the Mirror Protocol review, tokenized stocks, $33 million in January. So this is the volume they did in January. High inflation over the next 4 years, high interest pools, no cash flows to treasury. That's one thing I wanted to point out, is they don't have a fee associated with minting or anything like that, at least to my knowledge. So I like to see cash flows within protocols. It means if they're generating cash flows, you could eventually envision your governance token earning a dividend or a portion of those cash flows. And I do think that's where DeFi is heading, is these governance tokens are going to be earning part of the cash flows associated with that protocol. For example, Uniswap has a fee. They could probably add a little extra fee, like a 0.01% fee on top of that 0.03 liquidity provider fee, and have that 0.1 fee go automatically to the token holders, or something to that degree. I mean, I definitely think that's the future, but that's only my opinion. And that's kind of what I'm playing for when I'm holding these governance tokens. Obviously, price appreciation is nice, but in the long run, I definitely see governance dividends, and I that's what I look for. Anyways, the utility of the token is simply governance, multi-chain protocol. Mint and pool and stake, those are what you can do. Mobile wallet, direct to retail, I like to see that. First mover in tokenized stocks other than synthetics and Mirror. Huge potential, guys. Financial primitive in the Web3 infrastructure for synthetic stocks. That's a huge market. Price prediction over the next 4 years, I change this to 2 years, because inflation goes down significantly. I think $5 to $10 due to high inflation, guys. And I mean, obviously over the next year it could grow more than 233%, increasing the price. But I would probably, we're going to hit a bear market once again in the next 2 years. So be prepared. I would just say $5 to $10. I think just consistent. If you want to earn a high percent yield, join their liquidity pool, earn some money that way. But that is all, Dingoos. I hope you enjoyed. Leave a sub, leave a like. I appreciate each and every one of you. If you want to chit chat, we got a Discord, exciting stuff coming out here shortly, so make sure you stay tuned. Also, follow me on Twitter if you would like. We got a Dingle Twitter as well as a personal Twitter. Link is in the description. Go check it out. Peace out, Dingoes, and Dingle Dingle.